Hello, welcome back to PreciseAlgorithmTrading.com. This is Dave, and really interesting or great day in the markets if you're a bull. Um, Good stuff. So it is Friday, March 31st, last day of March. Monday will roll in a new month, and it'll be interesting to see what happens in April. So I pointed this out last couple nights, where the crosshairs are on the right hand side of the chart here. This is the S&P 500 E-mini futures contract, and so what I'm trying to do every night is go through what the markets are doing and give you some idea of direction of the overall markets. That doesn't mean that all the stocks are going to follow that, but generally speaking, you can apply the same methodology that I am. And generally, it doesn't always work because there's only probabilities in the market. But then I go through the internals of the market and show what's kind of happening under the hood with the bullish percent indexes. That's what I use and we use here. And then also I go through which the real thing for our website is the automatic trading systems, where you don't have to really know all this stuff, but if you understand kind of a framework of how all this stuff works, you get a picture of how the auto trading systems work. They literally work on their own. All you have to do is make sure the computer's on and nothing goes wrong, like computers can do sometimes. They're pretty, I mean, it's in TradeStation, it's where we run it. The program also runs in easy language, or it is in easy language, so it also runs in multi-charts. But we use TradeStation, and we actually use the older platform. It's supposed to be, I don't know, the old timers like it. I'm new to trading as far as auto trading in the last, I don't know, 4 years since I programmed those systems. I've been trading for almost 20. But applying these systems to an automatic trading system is kind of like a long-term plan to be able to not really be in front of the markets all the time. So anyways, long story short, that's it. And then so anyways, we go through what are the auto trading systems doing and what are the results of that, and kind of show you how you can make some income off of just basically letting the markets do what they do. So we'll start here. This is the E-mini futures contract, and this where I started up here, April. This is 10 years worth of data shown right here. 10 years on the daily chart. This is, but based on 10 years, April 90% of the time goes up an average of 1.86%. So there's just math behind that. It just takes the last 10 years or whatever you want to put on a chart. Actually, I can show you that. Say, what if we wanted to put in 20 years? It changes that to April is 88.89%. Wait a minute, it's not done. 80% of the time it goes up, and 2.34% is the average over 20 years. So if that does anything for you, it does for me, because I know statistics and time and seasonality plays into the markets. So that's what that's showing, and I guess I'll flip it back to 10 years just so it's consistent, but 90% at 1.86. So then May, it shows it being 80% at 1%, 1.05. This is the season of generally spring, and it seems to be when the bulls come out and play, just like a lot of things. And then you've heard sell in May and go away. Well, we'll look at those when May and June get here. So anyways, the markets went up nicely today. This is the S&P 500, went up by 1.46% on the E-mini futures contract. I'm going to flip over to the S&P by itself without the overnight action. Maybe it's a little cleaner for some people to look at. I use both. So we had a breakout of this diagonal line that's been I've had it on the E-minis chart for a long time. And what do we get after a breakout? We probably will get either a little bit of follow through and then some backfilling, What we don't want is to backfill all the way into beyond where, too far beyond where this diagonal line is, or this is probably a failed trend. So that's the S&P. I wanted to point this out too. This is something I drag out every now and then for you guys. I look at it more often than that, but the McClellan oscillators, this is the NASDAQ and the New York Stock Exchange. I don't even know what these exactly measure. I could go in and look at the math, but generally speaking, you can see that back here at this, it's 113.23, we were way over extended to the upside, and we got a pullback. And then we didn't get too hard of a pullback, and we didn't cross the zero line, and we rose again nicely. Then we got a higher or a lower high on the McClellan oscillators, and we also were, I mean, this is a diagonal line that wasn't there at the time, but this marked I think the next pivot low of where that was, or yeah, where that triangle was being formed. And you can see we bumped up against it quite a bit as the McClellan oscillators were falling, and they did go past zero. And so when you came back up to this line and you're under zero, it's a pretty good indication that we've got a change in trend. So, and then it proceeded to fall, and the bullish percent indexes fell with it, and we've rolled up and down and blah blah blah. So now we've come all the way back full circle. We've come to the top. We've hit this line. I'm expecting it to pull back. If it stays up above zero and then starts to rally again, that would be great for bulls and for the longer term health of the market, I think, since we've had some rough times here in the market in the last, I don't know why all that's going on. I am not going to fight it. So, all right. Anyways, the last year or so has been kind of rough on, market participants. So, close that, and then we'll move on to. I'm going to go through these charts pretty quick. So the Dow is similar. It's not near as bullish. It broke out of that downtrend line earlier, and we were moving. The McClellan oscillators, I put the S&P on there just to have reference. It doesn't matter which index we're looking at. They'll all roll over generally when they're all really ready to roll over. They won't do it together, but when they go hard, they will generally go together. Here's the NASDAQ, and we've broken out, and so so I've actually drawn Fibonacci extensions on here based off of the retracements. I've got really two. I've got the one off of this pivot high back here, and I got the one off the most recent pivot high, which isn't near as high as the last one. So there's multiple targets, and it's really interesting to me how these targets fall, not exactly with where the target dots go, but I can see us getting up to the first 1272 extension. Actually, we got there today. So if you get into Fibonacci's, I get into them a little bit. The 1272 extension is also a popular place for profit taking. So, and so we did today. We took quite a bit off the table and if we get a pullback and a new buy entry, we'll take it. We did that in a number of places. The oil, I got into this the other day. I got out a little too early. I probably should have just trusted my systems. But that's been a nice little move up. It's not, actually it is, it's buy signal today on the True Momo indicator for this week, I should say, at the end. So that's going to be interesting. If it pulls back, that's probably a pretty good buy indication, as long as both buy signals hold up on the True Momo indicator. And so I'm going to actually, here's bonds, because I've been talking about it, and I did go long bonds within the last couple days. One was a little early because I think we got the pop over here on the weekly, and it was all green, and I had all the target dots going, so I went and that's turning into a decent little trade. So I still have those stops on for underneath this pivot low right here, just in case, but I don't see it necessarily taking it out at this point. All right, and then we're going to flip over to the bullish percent indexes. Type in this stockcharts.com. We're not affiliated with them at all, but we use them along with a lot of other people. So here is the Dow tacked on a couple new X's today. The New York Exchange, New York Average, tacked on a couple X's today. The transports, quite a bit today to the upside, 50% change. So that's pretty cool. The NASDAQ still hasn't gone, up 3.48%. So if there's a fly in the ointment, that's probably it, but it's got to get past 42 to make new X's, and right now it's only at 36.82. So it's got a little ways to go. Maybe all that'll come on Monday. And that was the comp. Yeah, okay. Here's the S&P, tacked on a couple of X's, and then the NASDAQ 100, which is more volatile, and I called this yesterday. It needed to get up and above the previous X to turn into a new point and figure buy signal, which is what this is. It did that all in one day and moved quite a bit, 12.28%. So the NASDAQ 100 has moved quite a bit. The NASDAQ itself, which is a lot more stocks, hasn't done it yet. And then the S&P 100, it's tacked on a couple of X's as well. So the internals are pretty bullish right now, even though some of them are on major longer-term sell signals like this one. This is a point and figure sell signal in and of itself, with columns of O's exceeding the other columns of O's to the downside, as opposed to the other way around. When X's are going up, these O's are all going down. That's that, and then I'm going to end with, these are our auto trading systems. This is the Russell 2000 E-mini futures contract. I've been talking about it. This is the quarterly contract, and this is the quarterly action, and it's been pretty awful all the way down from there to there to there. Now we seem to have a pivot and some upward action here, even though today was a lot of back and forth, ton of back and forth today. I want to say there was, I don't even know, 20 trades to make all that, and that's a lot of just noise and chop. But at least we're going back in the right direction, it appears. This is 6 months worth of data, and that's our little move up in the last couple days. That's obviously the quarter, and it's been rough. And then I've been talking about putting on as much data as I can. This is 5/19 to 3/31. Not quite a year's worth of data, just because the Russell, for whatever reason, doesn't give me all the data. But you can see we had a big, this system had a big drawdown almost a year ago, and it's experiencing that now. So this is why you can't get too worked up about it, because then you'll miss all the upside. And the upside in this is pretty good. The potential, I should say. I can't guarantee anything. This is the NASDAQ. We had a nice move higher in the beginning of the quarter. We've come back quite a bit, and it jumped on me. Sorry about that. And then if you look at the quarterly contract, this one's fine. This is September till now, and this is that recent action that I think we're looking at there. And then maybe a little bit more than that. But then here's 330 of 22 to 331 of 23. This one is still my favorite system, just because this is a month's worth of sideways action. It went from I think April 20th or so to May 20th. And you know, you get that right there was a pretty good period of sideways action. This is a pretty good period of sideways action. When you're actually in the system, you can actually highlight the points and you can see what dates they hit on, and you can go look up the individual trades. Doesn't really work like that here because these are just PDFs. It's the simplest way for me to get through them in a hurry with you guys. All right, so this is the Dow, and we got a little bump at the end of the day, but generally speaking, this has been pretty down action lately, even though we've had some nice action at the beginning of the quarter to the upside. You take the good with the bad, guys. That's how it works. And so this is the quarter. This is the month, 6 months worth of data, and that's that last piece we were just looking at. And then here's, I don't know if this is a whole year's. Yes, it is. It's 330 to 331. This is a year's worth of data, and you can see back in, that was also some portion of April to May. So we're experiencing some of that type of pullback, maybe even a little bit longer this time. Hopefully we can get this thing up and going pretty soon. You know, markets are never the same. They just, you know, they do similar things. So there's a saying that's markets don't repeat, they echo. So that's not my saying, it's just one I've heard over the years. So that is it, guys. Hopefully everybody's had a great week, and you have a great weekend. I will talk to you later. Bye.